Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan. He's the head of economics and strategy at Mizuho Bank in Singapore. Vishnu, thanks for coming on the show.
Thanks for having me, Brian. Always good to be here.
Now, let's take a look at how markets are performing across the region before we get your insights. Now, it's a sea of red across the region. The Nikkei is at 26,540.45. It's down 0.65%. Shanghai Composite is at 3,413.83. It's down 0.2%. Hang Seng is down 0.08% at 26,284.33. The ASX 200 is at 6,591.9. It's down 1.17%. And the Kospi is at 2,763.19. It's down 0.56%. Now, closer to home, we've got Bursa Malaysia trading at 2,835.16. It's down 0.4%. And the SGX is at 2,835.16, down 0.1%. So, Vishnu, what are your thoughts on this terrible market performance right now?
I think the weak in the knees reaction of markets needs to be in the context of a pretty good run this year. So we've got year-to-date gains in a year with a pandemic. We've got strong year-to-date gains, particularly if you want to cue it off US stock markets, and exceptionally so for the tech stocks. So what's happening as we go into the end of the year? I think two things are colliding. One is the stretched or overstretched vaccine optimism is now on collision course with an outbreak of the COVID situation, but with a twist. We've got the mutation, a significant mutation in the virus that seems more virulent. So a more transmissible form means that there are greater uncertainties between now and when vaccine rollout is fully able to hit global markets or the global economy. Maybe that could take 2 to 3 quarters. So that it does raise the stakes. The other thing is that we did see the US fiscal pandemic response coming through, about $900 billion. So markets initially were showing a lot of relief around it. But I think there's some circumspection around it as well, given that there was considerable tensions between the Democrats and Republicans going into this 5,600-page fiscal deal. So it does leave questions, and also I think a grounded sense that it doesn't solve all of the problems. It provides a timely backstop, but between here and second half of 2021, there could be quite a few hurdles yet.
Vishnu, the other thing that's perhaps also weighing in markets is the fact that while we've got a mutation in the UK, even markets where the worst seem to have been over, like Australia, basically have a resurgence of that. So the underlying nervousness, could it be perhaps also the fact that the recovery that we're all hoping for, the quick recovery next year, is not going to be as quick as we thought?
I mean, definitely, Brian. In fact, if you think about it, and this is why I alluded to overstretched vaccine optimism, because it was never set to be instantaneous. We always knew that the rollout would have legs because of production and distribution capacity. And it's also going to be phased according to availability, and you will not hit that kind of more fulsome recovery until you've got 60 to 70% of the global economy that's already vaccinated, because otherwise, even if one country has fully done it, for argument's sake, US, the travel bans would still be very tricky around countries that haven't done it. So for those reasons, it's always going to be that way. But I think this mutation brings that point up acutely. And I think the two big questions around it are, if it's a lot more transmissible, then between now and then, there's still the same risk. The two big risks are hospital capacities getting stretched. And the other big risk is, are we going to regress back into lockdowns again? So these are two very big worrying factors for an economy already very badly hit. So I think that's one factor. The other factor is, whilst I think experts have said that probably this mutation will not diminish the effect of the vaccine, that hasn't been concretely established yet. So even though it's a tail risk, it's overhanging. and I will not pretend to be a doctor who understands this, but let's just say there's enough cause for concern.
Now, I spoke about Australia just now and the resurgence of COVID-19. Now, this morning, Australia's retail numbers came out and they jumped 7% in November compared to October. Now, that's on a seasonally adjusted basis. What should we be reading into these numbers?
The short answer is not much. The slightly longer version of that is a circumspection about I can't do seasonal adjustment for an unprecedented year.
Okay.
So that's one thing. And we're also heading into Christmas and things like that from a point where maybe there could have been holdback earlier. It's hard to tell. The silver linings are the JobKeeper program has helped to buoy consumer sentiment. So that's the relief. The overhanging doubt is with this new mutation of the virus looking like it's already transmitted out of the UK and we're not sure where else. It could start proliferating again and be another setback. So those factors colliding together, along with the fact that fiscal stimulus may fade or fiscal support for jobs and for companies may fade, means that we cannot extrapolate on a straight line, or for that matter, we can't even make big assumptions about level recoveries being sustained into 2021. So I think for the first half of 2021, markets will still be cautious. And I think a lot of this data will be discounted. I mean, recognition where it's due that the economy has held up well thanks to all these programs, but also the constraints and the risks that remain are very real.
Now, given the Australian situation, the Australian dollar, US dollar cross has resulted, in the last the Australian dollar strengthening. What's your view on the Aussie dollar in 2021?
So, I mean, we've taken a fairly optimistic view that it'll be a bumpy ride for the Aussie dollar, but the trend will be an upward trend. And the reasoning behind that is with or without the mutation. So the mutation is going to affect the amplitude and the speed of the recovery. The vaccine rollout means that incrementally two things happen. We get a restoration of travel demand as well as overall economic activity. And the second thing is you also get a resumption of a lot of infrastructure projects put on hold. And the confluence of these two factors means that you're going to get a lift for a lot of commodity prices, and Aussie is going to be a particularly sensitive gauge and reflection of that. So the Aussie dollar will be somewhat propped up. And from there, I think what we're drawing on is industrial metals, coal, as well as LNG. These are very big boosts for the Aussie dollar. And the other thing is that the RBA's commitment to expanding QE, expanding its balance sheet by 100 billion over the next 6 months starting November, that on surface looks like it should undermine the Aussie dollar, but it doesn't, because compared to the G3 central banks, Australia is doing far, far less. So that's also ironically propping up the Aussie dollar. The warning is, as Aussie dollar gets a bit too strong, that's approaching 80 cents levels against the US dollar, we do warn of RBA pushing back, because the RBA is acutely aware that a very strong, prematurely and excessively strong Aussie dollar could set back the recovery needlessly. So that's one of the warnings, that there is a policy risk around too much Aussie dollar strength. It's going to be bumpy in the first half anyway.
Now, Vishnu, there's 2.5 trading days before Christmas. What data should we be looking out for that could influence markets before Christmas?
At this juncture, I think for anybody who wanted to lock in profit, it looks like 2.5 days too many. And in terms of data that we are going to look at the risk of being dismissive, I'm going to say data are not going to be very important, because a lot of them are going to be backward looking. Markets are going to be struggling to focus on the forward looking risks and how those would pan out. I think, now that the US fiscal pandemic help deal is out of the way, what remains to be gauged are things like US politics, the Georgia runoff. That's one. Yes. The other is over the holiday season with a 4 to 6 week lag, what happens with the virus situation. We don't have concrete or firm answers for this. So the real question is, at this juncture, are markets happy to keep a buoyant mood on vaccine being the main driver of things, or is that going to be overshadowed by this mutation outbreak. And I think we probably need to turn our view to scientists to get a better idea of where markets will be. So we need to look at reasonable people to look at what the irrational response will be.
Well, on that note, thank you very much for your insights, Vishnu. We've been
My
speaking
pleasure,
to
Brian.
Vishnu Varathan, the head of economics and strategy at Mizuho Bank, on BizTag's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations, and visit our Facebook and LinkedIn sites. And thank you very much for listening.